Hi, Tom Hougaard here. I'm sure you've seen a multitude of YouTube videos and TikTok videos of traders that are portraying to give you some wisdom based on what happened after the fact. What I'd like to do over the next 10 or 20 minutes is to give you an insight into the mind of a professional trader and how he flips the switch, how he goes from experiencing a set of adverse circumstances and turning those circumstances into something that may not necessarily yield a profit, but at least it yields the correct kind of action, the correct kind of process. You see, one of the objections that I have with so many of the YouTube videos and the TikTok videos that I am accustomed to every single day is that they're always focused on the outcome. Oh, I made so and so much. They never lose. Oh, I made so and so much. Or hey, I just finished my trading and now I'm off to the spa. Or hey, that's the outcome, but hey, I want to see what you're going through. What is your process? And that is hopelessly devoid in any of the videos that I personally witness. So I wanted to make amends and attempt to show you how you turn an adverse morning into a morning where you are following the process and where you're doing the right thing. Doing the right thing does not necessarily mean that you will make money, but at least then you'll know that over time, by always doing the right thing, you will give the odds of success significantly, you'll weigh the odds of success significantly in your favor. So what I am telling people in my Telegram channel is I'm process orientated and the outcome will take care of itself. When I put on a trade, I don't know what's going to happen. I just focus on the process. And I want to show you how that translates when you're having a pretty bad morning. The article that I'm referring to here is also going to be the title of my first trading book. It is called The Best Loser Wins. And you will find that article under tradertom.com and click on resources. So essentially what this video is about is what actually happens when shit happens, and how does someone like me who is not focused on the outcome but is focused on the process, how do I deal with an adverse set of circumstances? And I want to take you through the trades of this morning because I think they will teach you a lot and they'll give you some really beneficial insights into how you can adapt that peaceful mindset, especially when things are rambling around you and you're not having quite the results that you are hoping for. This morning in the FTSE index, the UK 100 rolling index, the first thing I did was I drew the retracement lines during the night. So I saw a retracement here during the night and I drew a blue line to signify that, and I copied the length of that blue line over here. And once the FTSE started reaching this level here, I thought this is going to be a support level. And I initially started off by buying the FTSE at 7436. Of course, this is all in real time. This is not after the fact, and that I think that's a really good and important thing to point out here is that I'm not an after the fact teacher. I will do this in real time on my Telegram channel. So when I post a trade that I'm going long at 7,436, that's time stamped in that right moment. And so anyone who is watching that moment will be able to see, right, the FTSE is trading at 7,436 or 37 or 35, because there will always be a little bit of latency, a little bit of lag when you're posting trades on Telegram. So on my first trade, I executed at 36, and then what I do as a trader is, I have this principle is that when you are in a profitable trade, you should attempt to add to the winning trade. See, much though of the premise of how I trade is not focused on how the winners trade. No, and this may sound a little bizarre, but my focus is on trying to avoid to trade how the losers are trading. And considering that some 95% of all traders that are engaged in retail trading are net losing traders, and having worked at a brokerage for a good 10 years of my life, I have a really good insight into what I need to do in order to avoid being the 95% and by avoiding being in the 95%, I inadvertently put myself into the 5%. So what I do when I am in a profitable position and it begins to move in my favor is that I'll add to the position. So I bought at 36 and then I bought again at 37 and then I bought again at 42. Now you'll see from the timestamps that they're relatively close to each other. And you're gonna laugh at me now, and you have every right to, but I am getting out of this trade here just around 8 o'clock. Around this price level here at 51 and 53. And yes, I see it just as well as you see it, that the FTSE actually rallies another 50 points without me. Now, why did I get out? Well, I got out for a multitude of reasons. Once, there was a double top. Secondly, the amount of times that I have witnessed the FTSE index doing a U-turn exactly at 8 o'clock in the morning. So this was my way of playing the pre-market and you know, quite significantly sized too, and with a good profit. Of course, I would have loved to have been on board, but it wasn't part of my game plan, at least not for the open. Okay, so far so good. And you'll probably say, well, you know, where's the flip and switch in this? Because so far everything is going right. Yeah, but just wait a second. Because what happens next, this is the FTSE on a 15-minute chart after the open. It zooms higher, but that's not really what becomes interesting. What's interesting here is that the next 15-minute chart goes all the way down here. And I want to show you what happens when someone like me, could happen to anyone, gets fooled into a trade. You see, I started shorting here. So on the 15-minute chart, this is what it looks like over here. And around here, I actually start selling short. Now, you have the same chart here that you have over here, but this is on the 5-minute chart. And what happens here is that I spot this downturn and I start shorting here initially at 48. And then actually do something that I rarely do, but I do it if I have a very tight stop loss, is I add to my losing position here. It is something that I perhaps do 1 out of 100. You'll rarely see me do it, but I did it in this case. And then lo and behold, I get stopped out of here, just up here. And it's deeply frustrating. So what is my point here? Well, my point here is that when you are witnessing a very sharp sell-off like the one you've just seen on the 5-minute chart, what I wish I had done instead, and I did actually do it, but not until about 3 or 4, 5, 15-minute bars later, is I executed a short position. Because what's significant about this bar here is that it closes below the prior bar, closes below the bar before that, and it closes below the body of this bar here. So this bar here actually got much more confirmation. So what I've essentially done is I have zoomed away from my 5-minute chart over here, and I've zoomed out on a 15-minute chart so that I get a better overview. And I think that is a very important lesson to pass on to you, that at times we can become overly flustered by the noise or the activity of what happens on a 5-minute chart, or if you're trading on a 2-minute chart or a 1-minute chart. But when you want to get a bigger picture view, and perhaps especially after you have just been sucker punched in by a couple of unfortunate trades by selling short here and then getting stopped out up here, it might actually not be a bad idea to just take a step back, zoom out on a bigger time frame, going, all right, I'm going to wait for a better entry signal on a longer term time frame. And that's exactly what I have done here. I noticed this bar closing here, and immediately that this bar closed, I call it sell on close. And this is a concept, I just want to repeat that. I call it sell on close. It means that the moment that 15-minute bar closes, bang, I go in and I sell short. I get a fill at 7,430. And of course, all of this is time stamped. But you'll also notice that I do it in a slightly smaller size, although you won't be able to see that. And here's my entry. I'm selling short 1,200 pounds a point at 7,447. The reason why there is a discrepancy between my price and the price that you're seeing on Telegram is, it's a 1 point different, but I will actually post what I see on the screen at the time of the trade. So I might get filled at 47, but if I see that 48 is able to trade on the platform, that's the price that I will post on the Telegram. So this is where we were. I'm selling short here, and then the rest is history, as they say. But there is another important lesson. If and of course I add to my winning position here. I add another 50% at 7,395, and then I get out here at just around noon. I think there was a double button at the time, and well, it was a good trade. What I would like to point out on a 15-minute chart is that it very often is a lot easier to move your stop loss down, because I use as an overriding principle is that if the market doesn't get above the high of the prior bar, then I can move my stop loss down. So down here, the market did not get above the prior bar, so now I can move my stop loss down, and I can move my stop loss down. Now, you may say, well, why didn't I make my stop loss down here? Well, because in order for me to move my stop loss down, I need to see the market make a new low. We're making a new low, new low, new low, new low, new low. But this is not a new low. This is what we call an inside bar. That means that my stop loss actually stays up here, just above it. And then once I started seeing the market trade below the low of this 15-minute bar here, I added to the position, and then I decided to take my profits down here at about 60. It wasn't quite the low, but I don't get out of the lows. I wish I did. So the lesson that I wanted to pass on to you here is what I would call the moral of the story. What is the moral of the story? There's, as I see it, is that there's a handful of points that's the moral of the story. The first one being here is that in order to flip the switch, you need to gain some kind of composure. You need to calm down your mind, which is perhaps fearful of losing again after you've just been stopped out. The way that I do that is I keep my mental composure by switching from a shorter time frame into a longer time frame. And I also reduce my stake size. So normally I will trade up to 3,000 pounds a point, but here I'm actually just trading about 1,000, 1,200, and I add to my position once I actually get some kind of confirmation that the market is moving in my favor. So for me, flipping the switch is part something that you do from a mechanical point of view. When you're trading, it practically means that I'm switching from a shorter time frame to a slightly longer time frame in order to calm down my mind. But it also is a reflection of a belief that I have about how fear and how mindfulness fits into trading. I don't believe that we as professional traders can go through a trading life without, on a relatively frequent basis, being subjected to fear impulses. This morning has been an outstandingly profitable trading morning for me, but it's certainly, if you followed me today, you'll also know that it was at one point a significantly big losing day, and I simply had to just calm myself down and get back to focusing on the process. And while I don't sit necessarily and meditate in a darkened room with a candle lit in front of me, I am very mindful of how fear and how the absence of fear makes for much better trading decisions. And sometimes I'll use visual imagery in order to train myself into fearful, train my mind into fearful positions, and then simply by being exposed to these images, I mentally imagine myself being there, and then I calm down my breath and I begin to focus on the process rather than the fact that there's 1,200 feet of abyss below me, or that I am down by 58,000 pounds on the morning. And I focus on what I have to do, which is just being in this moment right now, and then focus on the next bar, focus on the next bar, focus on the next bar. Because that's how a professional trader will inevitably end up thinking if he wants to be professional. You can't scream and shout at the screen thinking that's going to make any difference. You might feel a little better by yourself by getting the aggression out of the system, but actually in my mind, you're much better off if you begin to focus all your energy on process, process, process. And I hope this video will give you some tips into how I focus on process. Now that I got you here, if you want to see me trade live, I will be trading live on the 1st of April together with this gentleman over here, Mr. Larry Pesavento. And the following day we'll have Al Brooks and Steve Ward and Dr. David Paul, who will all be entertaining on the Saturday and Sunday. So Friday I'll be trading live, and it'll be a non-farm payroll day, and it'll be the 1st of the month, so I am sure there's going to be a lot of excitement. Sorry, I should have said a lot of volatility, not excitement, because we're trying to calm the excitement down. So by implying that there's excitement, it also means that perhaps we're making irrational decisions. And actually, at all times, we want to be pretty stoic about it. And we want to be calm down and just follow the process rather than being result orientated. We are process orientated. Now you can go to my website, tradertom.com, and in there you will see a banner on the top of the page that'll lead you to a link where you can read more about the actual 3-day course. The 3-day course is actually incredibly cheap. It's priced just around the £1,200, depending on you want the free Al Brooks books, and if you don't want them, it's just about £1,000, which is pretty astounding for a 3-day seminar. Okay, that's all for me for now. I hope you enjoyed this. I hope that you would be able to take something away from that and how I am able to, what I call, flip the switch. And if you don't know what flip the switch mean, then I urge you to go to my website, tradertom.com, and click on resources, and then find the article Best Loser Wins, because in there you'll see how I describe the process of flipping your mind from being theory orientated to be process orientated. Right, that's all for me for now. You take care of yourself, and by the way, happy Pancake Day. I didn't know it was International Pancake Day, but it is, so there you have it.